Now, we talk a lot about how specific markets around the world are doing, but our next guest is taking a more global view. So we're going to zoom way out to the MSCI All-Country World Index, which measures the performance of nearly 3,000 stocks, both from developed and emerging market economies. So joining us now is Carter Worth, founder and CEO of Worth Charting. His clients have a mixed view on where that index is headed, but his charts have a very firm indication. Carter, take us through, and I'm not going to bury the lead here, why you're negative.
Sure. So we'll look at the chart in a second, but interestingly, when sort of polling institutional portfolio managers post-election where they think equities as an asset class are headed on a 3 to 6 month basis, fully half think it's quite robust ahead, and equally size is the group that says this is exactly where you're starting to get a pullback, that a lot is priced in. The word expensive is never used, at least by me, because valuation is a terrible timing tool. But I would argue that the word full is the appropriate word, that global equities as an asset class are full. And Don, maybe we can look at a chart or two. But the MSCI All-Country World Index, as you pointed out, is some 3,000 stocks. Has about 80 trillion in market cap. The S&P itself is 45. And what you'll see here is that we're up against an important internal trend line going back on a multi-decade basis. And so does one make the bet that we exceed, we break out to the upside, or that it hits its head? But you can see here, and it's very clear that almost, well, there's the expression to the penny, the index has ricocheted off these converging trend lines like a pinball machine in perfect order repeatedly. And each and every time it's been at the upper band here, it has struck its head. And so we're thinking that that indeed is what's happening or going to happen despite all the day-to-day euphoria. And so we're in the camp that fully half of our clients are, that it's not all sort of great things ahead, that much, if not all, on an intermediate basis is priced in.
Carter, we're going to keep that chart up for our viewers right now. Listeners on SiriusXM, what you're seeing is kind of like this kind of ascending triangle, right? It kind of keeps going, and it's getting narrower and narrower here. But when it bumps up against that bottom line that you're seeing, it could bounce as well from there. Isn't it important to know what's going to happen when it resolves itself? So even though it's short term, is it a short term, very bearish view, or a short term kind of tactical, we're due for a pullback view?
Well, remember, this is a 5-year, this is a 30-year chart, but that part that's highlighted, right, that's the past 5 years. And again, that's that chart. These lines. I mean, I haven't manipulated them, make them fit to make a thesis. It is what it is. And so just playing the arrows, playing the pinball machine, we're making the bet that it will falter here and pull back. Now, to your point, Don, if it gets down to the lower band, I think one would want to anticipate some sort of bounce. Or said differently, sequencing has been very clear here. And let's benefit of the doubt, stick with sequencing.
All right. Carter Worth with that trade on the MSCI All-Country World Index. Thank you very much. We'll see you soon, sir.
Bye.
All right, Kelly, back over to you guys.